Good morning from Chicago traders. It's 8:01 a.m. Chicago time on Thursday, the 17th of June, 2021. This is episode number 2016. Derivatives are not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully you hear me nice and clear today. We are done with the FOMC. Looks like the roll is mostly done. We are at what looks like 100% of the expected open interest having rolled into September. Historically, approximately somewhere between 76 and 82% of the open interest in one contract is anticipated to roll into the next. My voice might sound weird to you because I am just struggling all of a sudden over the last 2 days with allergies. If I go into a sneezing fit like I did yesterday, I'm just gonna shut down the broadcast instead of make you have to sit there and wait. I apologize for that yesterday. That was just out of my control. But today. Today, we're looking at, here's what we've got in our pre-market summary sheet. Today, we have mild risk-off sentiment overall. It's a market that is responding to the Fed still, the Fed outlook on rates shifting. The Fed said it would remain accommodative through 2024 before, but when we look at the dot plot currently, we see that there's some expectation of higher rates into next year. And even more, 2023 in the long term, they're looking at rates in the 3% range, something like that. So the the markets are responding to that. Specifically, the banking sector, the financial sector, is issuing warnings about this change. It's incredible how sensitive these guys are to short-term interest rates. As you can see today, what's getting pummeled? We have gold. Excuse me. Gold and silver really taking a beating. Gold down, silver down 5.54% live. Trading at 26.27, down $1.55, which is a lot. Gold down $79 on gold, down 4%. This is further to yesterday's losses. The S&P is off just 12 points, and the Nasdaq's off 60 points so far. We have a mix of up and down in the crypto space and currencies. The U.S. dollar is a little bit stronger, of course. As interest rates are expected to go up, it is more valuable to hold the U.S. dollar denominated assets, as we're likely to get more yield on our money, and that's where that stands. So mild risk off today. We are expecting Adobe to report after the close, expecting $2.81 a share, and Treasury Secretary Yellen at 10 o'clock testifying before the Senate, I think. And then we have the inflation rate at 7:30 p.m. Eastern time from Japan. And the Bank of Japan interest rate decision at 11 p.m. for those who are trading during those hours. The S&P has traded 265,000 contracts. The inventory is 81% short. 24 points of range, pretty active overnight session, overall balanced, and that's what we're looking at. I want to remind you again to follow Convergent Trading on Twitter. You can find them at twitter.com. You can see it at the bottom right, twitter.com /conv trading, CONV trading. If I say any terms, or I use a term that you don't understand, you can find that information at go-to-ct.pro/glossary-terms. So there are a lot of words I might use that you may not understand or that don't make sense to you. So Let's look at what was expected yesterday. Excuse me. Yesterday, expected the primary expectation is that we would most likely go sideways on the open and have a downward skew, expecting the market to breach the low of 3150 before the FOMC, and from there, it's anybody's guess. Yesterday was quite interesting. We had some pretty decent setups after the FOMC. Wave one was down. Remember, I drew those waves. Let me see if I can find it in the video. Right here, I talked about these waves, right? Looking at which way the first wave is, what the pullback is, and to trade in the direction of that third wave, and that played out pretty well yesterday. So again, as always, past performance is not necessarily indicative, but this is how things played out. Lots and lots and lots of rotations. Look at that. It's beautiful when my entire screen is filled with just one day of 4-tick Renko bars. This tells me that there's a lot of activity. But several times yesterday, we saw the market pull right back to the mid, right in here, mid VWAP, and overall a lot of rotations, lots of consolidation, inside bar breakout trades yesterday after the FOMC. It was very fast. The most fought over price yesterday was 42.04. 42.04 had a lot of fighting occur at that price, but the point of control ended up higher in the 42.15 range, and overall we're currently trading at 42.02, 42.04. So we are right back to that big area that we were battling. And if you recall yesterday, I talked about it most likely pushing to 41.90, 41.95 and 90. Let me find that in the video. I feel it's just easier to just demonstrate that. So let's see where that is. Anyway, I'm not finding it, but I was looking yesterday for the 41.90 on the downside, and I talked about the 41.58 to 60 something, or 42.56 to 64 as that cluster of measured move levels all together if we ended up rallying. So yesterday we immediately went to the 41.90, pushed to 4200. We went to the 41.90, and that was the low. Higher low on the retest sets up an inside bar breakout trade back through, and then we tested the prior session's low twice, 42.28 and a quarter. We stopped at 42.28 and pulled back to mid, made another attempt, and closed right there. Yesterday is definitely a trend day profile down, and we have to pay attention to 42.18 above, 42.15, 18 above, 42.04, which is where we are now, and then again we have to pay attention to 41.94, 41.94 below us. So very, very clear areas. We'll outline them right here. 42.18. Yesterday's point of control is 15 right there. 42.04, which is this low volume node. So 18, the MC point of control. And then 41.94 right there. Okay. So with the roll having been done pretty much maybe 102%, we are now back to using the volume delta and so on. We still have expiration tomorrow. Tomorrow's quad witching Friday, usually not a very good day to trade, but we still have expiration tomorrow. And so there's the effect of hedging delta, hedging options, or other positions or positions elsewhere, deliverables elsewhere in futures. Remember, futures are designed as a risk management instrument first and foremost. So that continues into tomorrow. But for the most part, I'm back to looking at volume. I'm back to looking at delta and using it to lean on. Everything is almost completely back to normal. The action normally doesn't go 100% back to normal, but with the FOMC, we've got some volatility, and that's likely to carry over into today. So this is the FOMC day right here, and this morning last night we had some selling. We tested the 4183 early, and then we came right back and got stuck in this MC point of control area that I outlined, 4194, and we are holding above mid and VWAP currently. So what we have formed is almost like a cup and handle type of formation right here with the pivot at the high. So at the open, I want to see how does the auction progress through 4206.75. If 4206.75 gets taken out, then I'm looking for a long somewhere into settlement, which is 4213. The prior close is 4213 and a quarter. Settlement and prior close are off a little bit often, and so that's the first trade that kind of presents itself today. If we continue to extend, then we're looking for 4215, which is just above, which gets us back into yesterday's point of control. But yesterday was a trend day, so the point of control doesn't really matter that much. I'm more interested in the MC point of control, 4218.50, 4218.50. So again, what I'm looking for today, given the posture of the market, the fact that we are above, we have an excess low. Look at the volume down here. We put in this low early and we never looked back. We are above the overnight point of control, above the overnight VWAP, and above the overnight mid in what is looking like a weakish high, or becoming a weakish high, because we're not getting away from that high like we did from the low. So I'm looking for a trade. Once it breaches 4206.75, I'm looking for an inside bar to take a breakout trade into 4213. Again, I'm telling you what I'm doing. You do you. You do your plan at your own risk. This is not a recommendation to trade, but I'm looking for 4207 half-ish, something like that, hopefully. And I'm looking for 4213. Giving me at least 1.5 R to 2 R return there, and then I'm looking for 4218, and at that point, I'm looking at 11 points of gain for about 3 points of risk. So, and then from there, if it continues to push higher, then we may be clear to the SOC. The SOC is not marked on the chart. Why isn't the SOC marked on the chart? It's also not in our it's not in our cloud levels. I can't wait for your answer. The reason is because the market actually went back. Remember, yesterday we went all the way back to 42.28. The SOC for FOMC was 42.2375. 42.2375. So we are done with that. So the next key level above the 42.18 becomes 42.28, the double top in that area. The double top in that area, that becomes a key level right here. This is a local week high at 28. This is an important area for us to keep an eye on. We want to see the market test if we get long. And in that situation, this trade would yield 20 points of gain for about 3 points of risk, hopefully. So we'll see how that plays out. Looking at the bigger picture, I want to just blow right through here. Looking at the bigger picture, look at what we did. We went back to the 41.90.94 and tested. We also tested the 20 SMA on the RTH session. A lot of acronyms. I'm sounding like a some sort of an Air Force pilot or something. A lot of acronyms here, but overall we tested and it looks like we had a bit of an excess on the session yesterday. You could see that tail there on the daily, but we did test below, went to 83 or whatever overnight, and have come right back up into yesterday's range. To me, given the overall play here, it may continue to try to get back into the range at least a 42, 18 half, 19 is what's expected today. So that's what we're looking at. Let's take a look at what's expected for today so we can all go and get ready to trade. Here we are, I'm setting up the chart. So let's first outline, and by the way, if you have not checked out EdgeClear, please head over to edgeclear.com. I would appreciate your support, of course. Check out Edge Pro X. It's the platform that I'm using currently. Been using it for months, and we continue to refine and build on it. And for the cost, I don't think it can be beat. So take a look at that, and of course, let's take a look at what we've got for today. So, what levels are we talking about here? So we want to pay attention to the overnight high at 06. We want to pay attention to the 18. The 18. We want to pay attention to the 28. There's a minor level at 24, but those are the key areas, and then we're back to 35 as the next area up. Back to 35. That was the prior week's close. There's a ton of volume that occurred at 35 yesterday. Here you are. That brings us back into the pre-FOMC balance. So that would be the key to the upside. The key to the downside is, again, 41.95, 95, 90, 95, 90. And then beneath there is the 86, 85, 85. And then we start to push into what is the 2 Vol Sigma at that point. And now we're pushing into what may be an excessive push lower. But beneath there, really, we're looking for 80 on the extreme. So that's the map for today. What are we looking for this morning? An open that immediately pushes through, takes out the overnight high. I'm looking for some sort of a consolidation or pullback, and I'm looking for it to breach and break through to settlement at 13, consolidate, 13.15, consolidate there. Remember, settlement close, 13, 13 quarter, point of control from yesterday. A lot of volume went off at 15, moving what is an artificial point of control because a lot happened at one price there yesterday before the close. But really the target's 18, expecting it to kind of bounce around at 18. But at that point, we're looking for a range of 42.04 to 18. It's just 14 points. So given the higher volatility in daily statistics, I'm expecting it to continue to drive to 28 before it takes a break. We'll clear the 18, we'll push through, and again, this is not 20, this is 28. That's the primary scenario for this morning, given the way we are set up and the fact that we've pulled back and created an excess overnight. The secondary is an open auction that pushes higher, takes out the high, then impulses down, consolidates here sideways, putting us a little bit into a kind of a sleep cycle, but then it pushes into VWAP and mid, consolidates here at this MC point of control at 90, 95, consolidates here and pokes through to 85 before coming back and finishing somewhere in the middle. This will this will give us more of a resting day, a resting type day after a trend day down. We generally rest after a trend day, but the trend days down have tended to create a V bottom, and that would be scenario 1. If we end up with a rest day, I'm looking for that low to be taken out from yesterday at 41.90, and then for it to come back and kind of rest at the bottom of the range. Those are the two main ideas. Good luck today, and I'll catch you tomorrow morning. Take care.